Bitcoin's closed at 108,000, basically where it was at the December top 317 days ago. So in essence, the price has essentially gone nowhere in this time, but in reality, it's done a hell of a lot to destroy sentiment throughout the last stage of this cycle. The sentiment has gone from extreme greed to extreme fear and over again. So this naturally destroys the belief in what is coming next. And I think as we cover off the indicators, the charts, and the signals we've been watching for an end of cycle, we begin to see what the picture may in fact entail. But it's not over yet, and usually around that time is where I lose people because they're just looking for the up only signal. And that's not what we're about here. So if you want another perspective, hit the subscribe button, like the content if you find value from it, and let's dive in. So today, 108K. I've got a couple of lines here, or a few more, and the idea that we're looking for is above the 50% a strength, below them is weakness, and the main one we're watching at the moment is from the all-time high to the current low of October. Above this line here, 115, that's going to be strength, and we need to see some closes above that level. At the moment, we haven't got it, and the only thing so far is closes above 108, which has basically been the support through this period of the last extreme greed move into an all-time high price. And that's going to be pretty important later as I discuss the market sentiment and how it's diminished over this entire cycle. And as one comment mentioned yesterday in yesterday's video, it's almost like a reverse bull market. So in terms of price, short term, we need to see closes above 115 and then above 120. That's my line in the sand up here for any sorts of moves into the next price level, or above into a new all-time high. Otherwise, the prices, the Bitcoin price is at risk, breaking 103, testing 100, which is the longer term 50% level. And for those following your moving averages, very, very close to your 50-week moving average as well. That's going to come in at around 103,000 when it closes this week. But for our 50%, which I think is the stronger one here, we're looking at 100K and the swing low at 98. So any price action for Bitcoin below those levels is possibly going to bring on this particular plan that I showed yesterday. Now, it's not the greatest looking scenario for Bitcoin for this cycle, but I don't think it's the worst case either. And I don't think it's the worst case because we haven't seen the extreme move to the upside, that extreme blow off top. So just a quick look at it now. If it breaks this 100, then it just increases the chance of coming back to test this breakout zone of the high 80s to low 90s, and then back to the 70%, the 50% level, which is around $70,000 to $74,000. You had the lows here, and then the 50% of the entire range. This is from the cycle low to where it currently sits, 71K, which also lines up with all of the previous tops from March. That's an important part we're going to look at next. If, however, we see some support come in at 100, maybe we get this chance of the move higher, taking out those tops again, and then potentially a new all-time high for Q4. But as it stands, we have a new all-time high in Q4. It was in the first 6 days of Q4, not how we like to see it, but at the moment it's basically played out as per usual. And when we look at the volume profile here too, it's not looking great for this particular move. Let's turn off some of the other lines here. And you can see the down moves. Anytime the price has come down, the volume has increased. It's higher than the moves to the upside. So look at these moves to the up in the green here. We got higher daily closes, more higher daily closes. Some of them are over the weekend, which is a little bit difficult as well for the volume profile. We got moves up and then higher, and the prices start to close down again, and the volume begins to increase compared to where it was when the market was going up. So in essence, you've got more people willing to sell, less people willing to buy. It's pretty simple at that point. And very interesting that over the last 2 days, the market has continued to fall, making this, in my view, a news failure of the interest rate cut, where the Fed dropped from 4.25 down to 4. It was expected, and maybe we start to see a reversal here because of these other signs, right? For a short term. Short term, we have some volume coming in. We had a reasonable close today above the 108. And we have seen on the liquidations $1 billion in the last 24 hours, which sometimes signals a bit of a turning point. It's not the final turning point, but it can be an intermediate or a local turning point. And the long-short ratio has very much favored the short side. So the short's getting a little out of whack here by about 3% differential. So there's a lot of people betting on the market going down. And sometimes when it gets too crowded on that side, you start to see a bit of a movement the other way. So taking them out. Now, if that's the case on the short term, we need to see at the very least close above 111 because that is the shortest term 50% that we can find here on the daily, the low to the high, and right through that middle is your 111 level. And essentially, it's going to be a stair-stepping move to the upside. 111, 115, 116, those tops, and then of course 120. So a lot of work to do here. We've got one more day left for the end of the month, and right now Bitcoin is looking very much red. It is down 4.8% for the month with 24 hours to go. So unless it can close above 115, which is the 50% level as well, so that's a really, really important point there. Throw a few more lines here just to make it a little bit more confusing. Then we are looking at further downside. You can see the volume has increased on this month as well. Now, I've got a few more data points that we've been following for this turning of the cycle. I'll go through those in a sec. But just to finish up here with Bitcoin, and I guess throw a little bit of hopium in the mix in regards to the market sentiment, we haven't seen Bitcoin blow up into this top, right? We haven't seen it to this all-time high get into euphoria or this thrill, maybe some optimism and belief. But as one comment yesterday put it, in yesterday's video, it looks like a reverse bull market where earlier on we saw this, and then later on we've seen a bit of this, the hopes, optimism, disbelief. And what that looks like is extreme greed, a little more extreme greed into this top, and then basically it's flatlined. And you can see that in the sentiment profile here. The market ran into extreme greed, March 24, and then again, November, December 24, January 25. And since then, the sentiment has basically come out of the game. There hasn't been as much excitement for each of the new all-time highs, and we've begun to see a reversal in the corrections. Well, an increase in the corrections, actually. Before they were shorter lived, now they're getting a little more longer lived, which, like we know from prior cycles and other assets, the pattern, if it starts to increase, generally means the market's getting ready to roll over. And this was a big one through 2021, where we saw increased greed into these highs, and the greed just hung on so long. Everyone was just buying, basically going from 17 to 42, doubling in a matter of weeks or more than doubling, and then doing it again, and then it started to die off. And from that point, we ended up in a lower high, complacency kicked in, and then things started to crash. And so I think we're potentially in that stage now, but because we saw the extreme greed earlier on and we haven't seen the same sort of gain to the upside like we saw in prior cycles, 2021 was about 2,100%. This cycle we've seen 700%, so about a third of it. Maybe we're not in stall for the same sort of declines here. 78% was last cycle. 2017 down to the 2018 low. From memory, it was about an 86% decline. There it is, 84%. And then, of course, price cycles are even greater. This was about 90%. Here's another 80+% correction. So that could be the silver lining in this case. If we are buying up this high, the corrections may not be as bad as last time, but of course the gains are going to become less, and that's potentially due to the amount of money that's in Bitcoin now compared to previously. So there's a lot more holding up the price, and it's not behaving as badly, like as bad as what altcoins behave, where you get bigger gains to the upside, but of course bigger drawdowns as well. So if this is the case, the breakdown point we looked at is around 98 to 100K. And from that, we have to just expect that we could see similar sort of corrections like we've seen already in this cycle, 31, 33%. So if we do that from the highs, 31 is 86,000, 33 is about an 84,000. So it brings you right back to the breakout point after the tariff low. Tariff low happened, nice big bounce, and then the breakout point, which wouldn't seem too bad Now, I mean, look, prices coming down is not ever good, but you can see why that could happen. There's a fair bit of price there that the market never came back to retest these 2 days there. Now, if things keep going, then we extend the corrections. You're looking at 44% down to the $71,000 level, which is the 50% line. That's the cycle 50%. So all the low for the cycle, the all-time high, divide it through the middle, gives you $71,000, which also lines up with all of those resistance levels before the Bitcoin broke out. So I like that area as another support zone if it gets that far. I think right now I've talked probably too much about downsides, and I start to lose people because they are really still interested in more upside. I'm just trying to prepare for all scenarios. And at the moment, there's been many other signals that have suggested things are either running out of steam, running out of time, running out of energy, essentially steam. So as an investor, I've got to be prepared for both, whether we get further downside or upside. So if you're interested in taking your trading and investing a little more seriously and working through each of these cycles, check out TIA, jump on the wait list, and you'll be notified once that goes live. The idea we've been talking about is rotating assets or capital into different asset classes. Some we've been watching, of course, have been precious metals, but this has not been from the peaks. It's much, much earlier on. So it's at a time when Bitcoin may still be going up, but you got to look for assets that are going up or looking stronger than others. So it's like trading Bitcoin to altcoins if they are stronger. And if you're not used to that, trading between alts and Bitcoin, Bitcoin and alts, then this might be a little bit foreign, but it's the same principle. Where is your money best put to make the bigger returns? We're watching Bitcoin and gold here. It's been declining for many, many months and is below the March top. When this has happened, it's generally signaled the end of the cycle too. And we saw that in the last cycle with the Bitcoin gold ratio peaking in April 21. And as it got to the next top in October, it just hit a double top. So it didn't even close above those levels. It did it again in November. And then of course it collapsed from that point. And this cycle, we saw the March top, and then a new top in December, a lower top in January, and then of course lower tops since that point. So we're seeing weakness develop, and in the last few days we saw the rejection here at about 28.8 ounces. Similar sort of thing we do with Bitcoin and silver, the NASDAQ, the S&P. You can see that Bitcoin has been down over this period from March 2024 against precious metals. So if you can get over the emotions of missing out on a few days of massive pump, overall, it's been a better investment to be in other things like precious metals, to be in, well, the NASDAQ, we know that, obviously, AI bubbles and so on happening, and of course the S&P 500 as well. Next thing with the downside, sorry to say, was the 3-day signal. We saw that from the all-time high, 1, 2, 3. So more, I guess, pressures for the price at the moment, more things that it has to overcome to get to that new all-time high price. Now we saw this in December, 3 days down, 30%. We saw it in March after the extreme greed, 3 days down, 33%. And it's happened throughout history that we've shown many, many times here on the channel. There is your all-time high at the time. And then the 3 days down, red, 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 lower highs, lower lows, not an up day, like not a green close. It's just lower highs, lower lows. Basically sellers taking control and giving you a very, very early warning sign that the trend may be changing, that the sentiment is changing. Of course, from those peaks, extreme greed. 3 days down only drops it to greed, yet the sellers are very much in control here from those all-time high prices. Not any other time, just from the all-time highs or very significant turning points. And in Bitcoin's case, it's predominantly been all-time highs. 1, 2, 3 again, massive liquidation day, and here we are with the largest correction so far throughout this entire move from the July top, which was the last time we saw some pretty significant extreme greed. Now the cycle Bitcoin curve started to diverge mid-October, and since then we have not seen it catch up to the composite cycle that we've been following. So I'd say if this doesn't come good in November, we'd have to throw this out, and by coming good would mean that the price action would catch up to what it was doing through the composite cycle, and you can see the red was heading higher in November. Throughout this entire year, we started tracking it first back in late April after the tariff crash, but you can see it's pretty much been on point with what the market has done for about 10 months. And at some point, the models, they just stop working. And in this case, for the composite on Bitcoin, that's around that period. We had the big liquidations and the cycle basically diverged. So something is much different. Therefore, I'm anticipating that we might not get that big move. The big move that I was looking for Q4, I was looking for eventually in October, for the second half of October, and it hasn't done that. So something has changed there. It's not that this time is different. It's about watching the models, watching the patterns, and seeing how they play out. And if something's changed there, well, we've got to go with it because it's just not happening there. I don't know what this guy was on about. Your Gann composite 5-cycle thing has been so wrong. I mean, I don't know what he's looking at there. Might need glasses or something. The other thing we're looking at is the daily exchange volume, and this is for signs of life, bigger bullish movements, and it's not there. We have our first day underneath 50 billion. There is some support at 30 billion, but in terms of the volume, if this is not coming back through, therefore probably not going to see the same sort of liquidity in the market. And I think this is a better example of where to look for liquidity than something like QT ending or global liquidity or something like that. Because at the end of the day, if this isn't moving and all that other liquidity is out there, well, the holders of that liquidity, they're not interested in risk on assets. Crypto is like the biggest risk on thing that we've seen in many, many years. Why aren't they putting their money into this now? I don't know, leave that up to the news to tell you later. Let the narrative follow that later. The data is showing that they are not putting it in at the moment. Of course, this can change in a couple of days. You can see it's run from 31 billion, had a climb up here a couple of days later to 43, 47, 50, 56. You know, within a week or two, it did break out of those highs. But for now, it's hopefully finding a base here, and hopefully we start to see this move up for the bulls, of course. If this keeps breaking down, then you've got to watch for any of the support there at around 30 billion. So overall, this is not looking strong, but it hasn't completely broken down yet. Liquidations, we've covered $1 billion liquidated there. Bitcoin against altcoins, what does that mean now? Well, altcoins have also continued to slide here. We've also seen that with Solana, Bitcoin in the orange, XRP in the white, Binance and Ethereum. They haven't managed to play catch up yet to Bitcoin. Maybe that doesn't happen this cycle. This is just looking at their returns against Bitcoin for this entire cycle. That's where this line goes back here in November 22. And so far, Bitcoin is, well, second best out of these top 5. But if you hadn't gotten onto Solana by late 23, well, Solana's basically gone nowhere. And you can see that with the returns. If you look back just to the beginning of 2024, well, you still got XRP, Binance, Bitcoin, and then Solana and Ethereum have been at the lowest point there. So it really depends on at what point did you invest in any of these. But just looking at it from a cycle point of view, well, you've still got here Solana, obviously Bitcoin and XRP there. Now, in terms of altcoins, they had a good day up yesterday, but they've reversed since that point. Therefore, still looking at the possibility of further downside because it has not closed above 7%. I'll be watching for the weekly close and the monthly close to see what happens here, whether there's any sort of signs of strength. Otherwise, it's not looking great for altcoins again and potentially further downside. USDT continued higher, so the dominance for USDT has continued up. Not a good sign here, and the sign looks very similar to what happened in 2021. This is what I've been following and tracking as clear as I can make it, as clear as day, that we saw the same sort of thing happen with higher lows from the extreme greed. So of February, March, April of 21, you had a higher low for the dominance, but you had a higher high for Bitcoin price. And then you start to see this move higher for stablecoins. Bitcoin drops, altcoins drop, higher low, and then it starts to move higher again. So if we see this accelerate from this point here, not a great sign for the cycle because it would be doing something similar to the bear market of 2022. Now, there will be a couple of times to exit. There are these points here. You can see where the stable coins have hit resistance and fallen back to the support line. So, if that does happen, maybe the prices come back to where they are. Let's just wait and see whether that is if that's actually what happens. But I think it's important to be prepared for that now as we've come back up to the 5% level. breakouts of that, not going to be good, especially with these higher lows that continue to form. And the total crypto market cap, and first day now, we've seen in a while, underneath 3.65. That brings it back under the previous tops of December and January, which again, not a great sign here for the overall cycle. You don't want to see prices come back underneath the previous highs. It generally means that there is some more weakness forming in the market. It hasn't completely broken down the 50% yet. You can take it from the tariff crash low to the highs here. That's back at $3.27 trillion. So things are not looking great, but that could just be part of the correction into the 50% level. That's what we've been looking at through this entire period. Some of the other indicators that we watch in terms of liquidity, like the liquidations here and also the exchange volume, aren't painting a pretty picture either. However, we haven't seen that breakdown. So cautiously, very cautiously bullish, but there are a lot more signs leaning to the bearish now, at least in the short term. And then as it progresses, if it is going into a bear market, you would start to see those signs continue to grow over time. And so to try and pick a top, I'm not going to do that. I'm just going to keep watching the signals. Are we beginning to see more weakness than strength, or vice versa? And right now, a lot of those are showing a little more weakness than strength. And the weakness continues to compound here. Over to the traditional markets, and well, I think these are going somewhere that's going higher longer term, but in the short term, it's doing almost the same thing as it did 5 years ago. Look, we saw that peak come in just a day earlier than this one. I'm not trying to pick this to the day, and look at the pullback. A couple of days pullback here, and we've got this slight pullback. Now, what happens over this November period? Obviously, we could say anyone's guess, but so far it's doing exactly what investors did 5 years ago. These are all investors, traders, buying and selling through the market. They're almost doing the exact same thing on the exact same day. It's completely uncanny, but this is how markets work. Well, let's see how long this continues on with repeating the cycle into that top, and we'll continue to play that game. Now, just because the S&P 500 is going up doesn't mean that Bitcoin also has to go up. If this is the first time you're watching, thank you. Hit the like button if you've made it this far in the video, listening to me talk about all these markets, and you find value, of course. What we've noticed is Bitcoin tops first, then the S&P, but in prior cycles, the S&P has continued to grind higher. For example, 2013, 2014, 2015. Meanwhile, Bitcoin's going on a major bear market. Same thing in 2018. The S&P 500 was chopping around, significant corrections, new all-time highs, significant corrections, new all-time highs. Meanwhile, Bitcoin's also going in its major bear market. And 2021, S&P 500 topped about 6 to 8 weeks later than what Bitcoin did. So at the moment, we've got Bitcoin diverging here on the downtrend. You've got the S&P 500 grinding higher, and that, from what we've seen, has been typically normal as well, especially towards the end of the cycles. Now, other signs that the S&P 500 is still going higher long term. Actually, I'll do that one. But short term, maybe it's a little bit overbought, and which might be the reason for these couple of little pullbacks here, which could develop into that larger pullback. So this data shows active managers reduced their equity exposure down to 35%. So basically sold out. They only had 35% exposed to the market at the low. Now they are 100% leveraged long. What are these fucking idiots doing? They're like, I'm on YouTube, you're just watching me. These guys are active managers. Active manager equity exposure, 100% at the top. I mean, I'm not the greatest, but you got to be getting long somewhere in the middle, not at the top at this point. This week, the equity exposure jumped over 100% leverage long, with the S&P's 500 at 6,900. This is their highest equity exposure since July 24. Of course, they can still be right into that movement higher. But if basically everyone's in, then what happens next? Active manager equity exposure. All right. Keep watching those. Now, November market performance for the stock markets has been relatively good, basically one of the best months, as Jeffrey's showing here with Almanac Trader. You can see day by day each of the lines here for each of the stock markets, and in the post-election year as well, have essentially all finished higher to a varying degree. Could be good signs there for the rest of the market. Gold looks like it's going on a bit of a complacency bounce here with volume lacking into this move higher and increasing volume with the significant down days. I think the same thing is going on here for silver, increasing volume on the larger down days, even on the down days moving into the top, pretty significant volume there, right? It still went higher, but you can see the weakness forming. Lots and lots of selling happening. People aren't trying to sell the exact top, but yeah, selling coming in. And look at this volume just dying off on this weak ass rally. So it doesn't mean that it can't go higher, maybe into a new all-time high. It just doesn't look like it's going to be long-lived like the prior move was. So pay attention to that as well. That leads us into the end of the cycle. And leading into this peak, we see further downside again for the home builders ETF. It has broken 104, closed underneath that. And it does look like we're into this, this phase now where things are beginning to roll over. Now, I haven't seen that yet for the stock market, but several other ones like we've been tracking, home builders potentially rolling over, risk on stuff at the moment, Bitcoin slightly rolling over. So we'll keep tracking that as well. And MicroStrategy has collapsed through the 50% level like it did back in February 2025. So here is our 50%. There is the orange line. That's the entire cycle. If we can just take this one out of view for a second, you can see that it is on its last legs here. Lower highs from the exuberance top, more lower highs, and it's basically got one more support level here at 230 before it goes into another decline down below 200. See what happens through this chop, whether it can make it or it keeps declining. Prior cycles have been roughly 80 to 90% corrections. So from this top, 80 to 90% corrections, about 50 odd bucks, that's 90%. 80% takes you into the lows of that move, about 100. And it's a very, very similar pattern. So investors are doing the same thing again. Now that's the hope in this whole thing. You've got a big blow off move, a decline with a bit of a spike low, a rally higher, okay, double bottom rally higher, another decline, another higher high compared to that one. There's a decline, a higher high compared to that one. And this thing dumps. This one has continued to bleed. So bleeding versus a dump. This turned into a higher low with another move higher. I think that's what the MicroStrategy hopefuls that, DCAing in over the period, thinking this is the next greatest thing, the whole money glitch they're hoping for. But I think, I think MicroStrategy is probably at the end of its wits right now. And that's what happened last cycle as well. Big decline, rally, broke the 50%, and then broke down again. Oh, the other thing with this is that MicroStrategy did all of this consolidation above its 50% and then took off. Whereas this time, this consolidation, which I think is distribution, has happened above the 50%, but with a few more tests of the lows. So there is slight hope that if this rallies back relatively quick above 280, it might have that next chance, this next huge leg. So overall, things aren't looking good. I know that's probably a time where people give up and they say, I'm done with this cycle, I'm out. What I say is have a plan. And what does having a plan mean? It means knowing when you need to get out with your risk and reward. What's the risk to the downside? What's the reward left to the upside? If that is foreign to you, get onto it now in any way possible. Because if this is the time where things are starting to decline, the last thing you want to do again is basically round trip every single thing you've been holding. Even if it's in a loss, a little loss is better than a large loss. So it's a challenging game, but if it was easy, everyone's going to be multimillionaires and even billionaires. And from this point, we still haven't got the complete breakdown, which is why I'm saying there is still time to get your plan in order so that if there is a decline, great, you know what you're doing. If there is some support and the market goes higher, fantastic. You also know what you're doing and know how to get back into a position of strength if the market does happen to turn around here. So let's hope for the best, plan for the worst, and I'll see you guys back here at the next video. Hit the like button, subscribe to the channel, check out the Investor Accelerator, join the waitlist and get the reports in the meantime, and have a fantastic weekend. I'll see you guys back here at the next video. Until then, take care and peace out.